Hello everyone and welcome back to the channel. So in this update, I am sitting at $209,194. I received $509 worth of dividends for December. And so that's a very good number over the $500 mark. Only had a few months like that in 2024, so good to see that. And I think we'll see many more of those in 2025. So end of the year, it's been amazing. I was just doing a little bit of reflecting, and I saw that at the end of last year, the YouTube video that I did for the end December 2023 update, I was sitting at $134,411, and now we're sitting at 209, 196, 197. So if you take the difference between those two, it's $74,783, which is a pretty massive gain for 1 year. So I'm really happy with that. And I actually contributed exactly $30,000 this year in 2024. So that means that $44,000, almost $45,000 came from investment growth alone. So that's really amazing. That's actually more than I contributed. So I'm really happy with that. So. And I'm also happy with just the amount that I contributed. So you can see here in 2021, when I started my investment journey, I had contributed 39,000. That was, I graduated in May 2021, so I was only working for 2/3 of the year. But I had like a bunch of savings from before from previous jobs and stuff, in the summers in university. So that was a big year, like 39,000. And then I was living with my parents in 2022 and 2023. So in 2023 was just a massive year if I was able to contribute like $52,000 almost. But I'm proud of being able to contribute $30,000 in 2024, because if I consider my rents altogether like over $2,000, like if you include the utilities and stuff. That's over $24,000 that I could have invested, but instead of put towards just rent. So yeah, I'm really happy with being able to have done $30,000 despite that. So yeah, it definitely comes with some diligent saving. So, and the plan for 2025 is to increase it by 10%. 10% increase from 2024, so up to $33,000. So that's going to be interesting. Definitely some solid budgeting will need to be done to meet that goal, but I want to set an ambitious goal to hopefully hit in 2025. So yeah, so the markets have been doing really well. They recovered recently from a bit of a dip, and just recently, so you can see that little dip there, and VFV and the S&P 500, much bigger of a dip inside of Canada, and I'll explain a bit why I think that is. So on December 18th, the Federal Reserve cut the interest rate, the federal funds rate, from 4.75% to 4.5%. So you think, oh, if they're cutting the interest rates, the stock market should go up. But the Federal Reserve released this, which is the SEP, the Summary of Economic Projections, which is basically like a consensus from the Federal Open Market Committee, the FOMC members. There's just like 20 people that just basically give their estimates for a lot of metrics that the Federal Reserve uses to measure inflation, as well as projected federal funds rate. So the big thing that basically spooked the markets was this right here, and the inflation part. But let me just show you this, the main thing. The federal funds rate in the September projection, they thought we were going to end 2024 at 4.5%, and cut it down to 3.5% in 2025. So that would be a whole, full percentage point decrease in the interest rate. However, they are now projecting in the December SEP, they're projecting only 0.5%. So that's much less than they have predicted in the September projection. And it's because they think that inflation is actually going to be higher in 2025 instead of lower. So they use the Fed mainly uses the PCE inflation to form the projections. So they think it's going to go up from 2.4 to 2.5 instead of 2.3 to 2.1. So they're thinking that inflation is going to be a bit more sticky, potentially stagflation coming up ahead, but it's persistently higher than what they than what they would have hoped. So they're adjusting their forecast accordingly, and that 0.5% interest rate difference, it means a lot in like mortgage markets and many many markets around the world. That's why I think you saw that knee jerk reaction. I think it's recovered pretty nicely since then. So, but we'll see. Might be a bit early to tell what will come of that in the long run. So, but what happens with that for sure is that we've had a weakening Canadian dollar in response to that. So if the U.S. interest rate is higher than the Canadian interest rate, you can make more interest holding U.S. dollars. So demand for U.S. dollars increases, and because of that, the Canadian dollar weakens. So, which is actually terrible for Canada because like we have our Canadian dollars at a historic low with the U.S. dollar. So let me do USD to CAD. Sorry, other way around, CAD to USD. It's 0.69 right now. It's extremely low, and it's only going to continue to get lower, I think. But this is bad because our trade with the U.S., anything that we import from the U.S., is just going to continue to get more expensive because of our weakening Canadian dollar. So I think you're going to see a lot of additional food inflation in Canada, and we might be forced to increase our interest rates in response. And there's also the 25% tariffs on Canada that may or may not be enacted next month. So there's a lot of uncertainty in 2025. I'll say that. But the best thing you can do as a long-term investor is just to keep buying dollar cost averaging into the market. I know that's what I'm going to keep doing. And so I do think with all these things though that are going on, all this uncertainty, persistently higher inflation, gold is definitely a good buy. It has been kind of just meandering sideways after a bit of a decline. So I think it's definitely a good time to pick it up. With all this uncertainty that's going on and persistently high inflation, I think it's definitely a good time to potentially buy gold. So if you're interested, that might be a different, if you want to add a little bit of safety or a little bit of, safety from inflation, I think gold's definitely a decent buy right now. So, but yeah, the portfolio is doing really good across the board. VFV is just absolutely killing it. I'm over 40% gain just on price alone between VFV and VOO, and that's not including all the dividends I've received from these over the years. So these have been doing excellent, and VTY also had a really good year. Everything's in the green now, so I'm very happy with the results. SPLT is actually this has been a great move actually. If you remember a few videos ago, I had made the switch from cash to SPLT. I'm almost up 3% on price alone, and it's giving me more monthly income, like $51 a month. So this has just been actually phenomenal. I'm really, really, really happy with that switch from cash to SPLT. And if you haven't seen that video, please go check it out because I go over the reasons why I switched cash to SPLT in my portfolio. So it looks like also the projected dividends for January will be massive. Of course, VEQT is an annual dividend payer. So I have here an annual yield bar inside of this projected bar here. So it could be over $1,000 in dividends. We'll see for the next update. So that's going to be pretty massive. I'll be getting to work on the FHSA right away inside of January, purchasing more VEQT. Last thing I just want to show, I kind of want to show my 2025 plan, so a little bit more detail. So I have here $33,000. So I kind of just set a plan here of like how I want to like delegate it. It is an increase across the board of what I need to invest per month compared to what I was doing in 2024. So if I open this up, like on average, I was doing 1,000, sometimes 1,500 if there are 3 pay periods in a month. And then I did 2 big buys with my bonus and bonus as well as my tax refund. So it's going to be pretty hard. I'm just setting an ambitious goal. If I could do it, great. If I can't, no foul, no harm, no foul. I think it's better to set goals that you put probably like you might not meet, rather than set goals that are so blatantly easy to hit that, like it wasn't even a challenge for you. So this is going to be, $3,000 extra. If I don't get a raise this year, which is, there's definitely a potential for it given the economic conditions inside of Canada. So, but if I don't get a raise this year, it's definitely going to be requiring some increased budgeting and some sacrifice to get to that. But you know, I'm young. I want to get this portfolio just trucking along. Get over 250,000 pretty soon. So yeah, I hope you guys like the video, got some insights about the SEP and the federal funds rate, and can take away a little bit from that, as well as maybe just being, seeing the way my portfolio is functioning might be a good way for you to blend that mix together. So anyway, so thank you guys for tuning in, and I'll see you guys in the next update, and Happy New Year.